Yellen warning of dire consequences if the debt ceiling is not raised.
And they certainly could be dire, Cher. You can't just stop paying your bills and not expect markets around the world to react. Let's look at what Janet Yellen said today in an op-ed in the Wall Street Journal, clearly delivering a message she very much wanted to send. She notes that, yeah, the U.S. government's always paid its bills, but now the consensus on both sides of the aisles is that failing to raise the debt limit would produce widespread economic catastrophe. Here's the doomsday ceiling scenario she paints. A default is what this would be if you stop paying your bills on things like Social Security payments, all kinds of things that people in this country depend on. Moving on, it could precipitate a historic financial crisis. The U.S. would probably get downgraded by Moody's and all of those credit rating agencies, things like that. What would the markets do? Rates might spike, stocks sell off, all kinds of turmoil. And all of this, of course, could lead this recovery to turn into recession pretty quickly. So with all this dire consequence hanging over Congress's head, why is there any doubt about this? We know, number one, that Congress is set to vote on this bill next week, raising the debt ceiling to $28 trillion. And it's in the midst of a debate over this $3.5 trillion infrastructure bill that the Democrats themselves cannot agree on yet. And they've threatened the Republicans that they'll pass it on a reconciliation bill. Leave the Republicans out of it, just go Democrat all the way. So Republicans are in a position now where they're saying, if you want to raise the debt, the spending so much, go ahead and raise the debt ceiling on your own. We will not support you on this, making it all the harder. So will we get a default, Heidi, and what happens if we do? We don't know. In so many other instances in the past, and almost all of them, somehow, when there's so much pressure on, they do get it done. Goldman Sachs says that even if this bill is not passed in time to avoid the technical default, there'll be enough cash on hand for the Treasury to keep paying the U.S. government's bills until late October, early November. So there's actually more time to get this done. But in the meantime, it can create market volatility. It's certainly creating some concern and uncertainty right now.